Let's talk about the Pi network, the cryptocurrency that promised to revolutionize digital money by letting anyone mine coins right from their phone, just by tapping a button each day. It was simple, accessible, and for a while, it felt like you were getting in on the ground floor of the next big thing in crypto. For a while, it was a quirky experiment that attracted millions of hopeful users worldwide. But now, for those same holders, it's become a financial headache and a source of regret. Many are left wondering if their digital fortune was ever real at all. As of February 11th, 2026, Pi has crashed to just over 13 cents, a staggering 95% drop from its $3 high just a year ago. That's not just a correction, it's a total collapse that's wiped out billions in paper wealth. That's not a dip, it's a nosedive. Market sentiment has shifted from cautious optimism to outright panic. The technical indicators, they're all screaming one thing: sell, and sell fast. In the last 24 hours alone, Pi dropped another 4%, continuing its relentless slide. Every time investors think it can't get worse, the price finds a new low. Just last year, people dreamed of paying off mortgages, buying cars, or even retiring early with their Pi holdings. Now, it barely buys a cup of coffee, if you can even find a cafe that accepts it. Social media is flooded with stories of disappointment. Forums that once buzzed with excitement are now filled with frustration, disbelief, and even anger as people come to terms with their losses. The story is classic crypto: hype-fueled rise, catastrophic collapse. It's a pattern we've seen before, but for many this one stings more because it felt so accessible and so personal. So what happened? It's all about supply and demand, the fundamental forces that drive every market, but especially volatile ones like crypto. The market is drowning in new tokens, with millions more minted every day. But buyers? They're nowhere to be found. The excitement that once fueled demand has evaporated. Pi's supply has become a fire hose, flooding the market, while demand is barely a trickle. With so many coins and so few buyers, prices had nowhere to go but down. The result? A perfect storm of bad news, and investors are caught in the downpour. Panic selling has only accelerated the fall, creating a feedback loop of fear and loss. How did it get this bad? Let's break it down and look at the key events and decisions that led to the great Pi price plunge of 2026. The main culprit behind Pi's price crash? It all comes down to a classic case of supply and demand gone haywire. When too much of something floods the market, its value almost always takes a hit, and that's exactly what's happening here. Over the past few months, we've seen a massive surge in circulating supply, with more tokens entering the market than ever before. Millions of tokens, which had been locked away and inaccessible for years, are now flooding exchanges and wallets thanks to the mainnet migration and scheduled unlocks. This sudden release has created a tidal wave of supply. For years, Pi users mined diligently on the testnet, accumulating tokens that couldn't be traded or sold. These tokens were essentially in limbo, waiting for the day they could finally hit the open market, and that day has arrived. In February alone, a staggering 300 million tokens made their way to the mainnet. On February 9th, a record-breaking 33 million tokens were unlocked in just a single day, setting off alarm bells for investors. Each of these tokens represents a potential sell order as holders rush to cash out and realize their gains. The temptation to sell is high, especially after waiting so long. This relentless stream of new supply is overwhelming the market's ability to absorb it. With so many tokens up for grabs, demand simply can't keep up, and prices are being pushed down day after day. And the migration isn't over yet. Every day, more users are completing KYC verification, unlocking their tokens, and joining the selling frenzy. The pool of potential sellers keeps growing. The market simply can't absorb years' worth of accumulated tokens in just a few short months. The backlog is enormous, and it's creating a bottleneck that's hard to clear. Meanwhile, demand from new buyers is nowhere near strong enough to counteract this overwhelming flood of supply. There just aren't enough people willing to buy at current prices. The result? A price chart that's all downhill, with little sign of recovery until the supply and demand equation finds a new balance. Mainnet migration is the engine behind Pi's collapse. It's the pivotal moment that transformed Pi from a closed, experimental project into a real, open market. This shift has exposed the true dynamics of supply and demand, and the results have been dramatic. For years, Pi was a walled garden. You could collect tokens, but not sell them. The tokens you mined sat idle, locked away in your app, with no way to realize their value. This created a sense of anticipation and mystery, as millions wondered what their digital coins might one day be worth. Now, the wall is down. 16 million users can move tokens to the mainnet, with more joining as they complete KYC. The floodgates have opened, and the digital coins are finally free to circulate, trade, and be sold on the open market. Imagine millions of people suddenly allowed to sell their collectibles. Prices would tank. The same thing is happening with Pi. The sudden surge of supply is overwhelming any existing demand, and the market simply can't absorb it all at once. Many Pi holders mined for years with zero effort, so any price above zero is profit. For most, mining Pi was as simple as tapping a button on their phone each day. There was no financial risk, no electricity bill, and no hardware to buy. Selling at 15 cents is disappointing, but it's still free money for most. Even if the price feels underwhelming, it's a windfall for people who invested nothing but time and curiosity. The imbalance is clear. Millions want to sell, but few want to buy. The market is flooded with sellers, while buyers are scarce and cautious, waiting for prices to drop even further. The math doesn't work for a stable price. With so much supply and so little demand, prices are almost guaranteed to fall, and volatility is the only constant. Until most early holders cash out, recovery is unlikely. The market needs time to digest this massive wave of selling before any real stability can return. The constant wave of new sellers is capping any chance of a rebound. Every time the price tries to rise, another group of holders rushes to sell, pushing it back down. The migration process is far from over, so expect more pain ahead. As more users complete KYC and unlock their tokens, the selling pressure will only increase. The market is stuck in a cycle of relentless selling. Until the majority of early adopters have exited, this pattern is unlikely to change. Stability won't come until the migration dust settles, and only then will the true value of Pi begin to emerge. As if migration wasn't enough, scheduled token unlocks are making things worse. Over the next 3 days, 60 million more tokens will be released. In the next month, 140 million. The market can't absorb this volume. Each unlock is another wave of selling pressure. Traders anticipate these events and sell early, driving prices down even further. The combination of migrations and unlocks is a 1-2 punch for Pi. Until this tsunami of new tokens subsides, recovery is nearly impossible. The price chart remains grim, no matter what the project team does. So, what's the Pi core team doing? They're focused on the long game, not the short-term price. Their strategy: build a robust ecosystem where Pi is actually useful, not just traded. They're rolling out updates, developer tools, and expanding the network's infrastructure. Ironically, these improvements enable more selling as tokens become liquid. The team is betting that, once the initial sell-off ends, real utility will drive demand. It's a massive gamble. Building a thriving ecosystem is tough. For now, they're asking for faith while the market shows none. In January 2026, Pi launched Protocol V23, a major upgrade, the big new smart contracts in Rust, opening the door for decentralized apps. Now, developers can build games, marketplaces, and more on Pi. The team also released tools to make app development easier, even for non-coders. The goal? Create real utility so people actually need Pi tokens. If successful, this could spark organic demand and stabilize the price. But it's a long road from tech upgrades to a thriving ecosystem. On the demand side, things look bleak. Trading volume has collapsed by 99% since last year. Few new buyers are entering. Google searches for Pi Network are at rock bottom. Public interest has vanished. Most activity is early miners selling, with little fresh capital coming in. Even small exchange outflows are dwarfed by the flood of new tokens. Broader crypto market weakness makes things worse. Investors are risk-averse. Without a catalyst to reignite interest, Pi's price remains under pressure. The demand drought is as severe as the supply flood. Is Pi doomed? Not necessarily, but recovery will be slow and uncertain. The only hope, build a real ecosystem where people use Pi for goods and services. If millions need Pi to buy, play, or subscribe, demand could finally offset selling. Some analysts predict a modest recovery, maybe 50 cents by year's end, $1 by 2030. But these forecasts assume everything goes right: developer adoption, user interest, and a healthy crypto market. The risks are huge. Failure is very possible. The current crash is a harsh reminder that vision and reality are often miles apart. So where does Pi stand? At a crossroads. The price is crushed by oversupply, with more tokens coming and little demand. The core team is building for the future, betting that real utility will save the project. Recovery, if it happens, will be slow and tied to actual ecosystem growth, not hype. Investors need to be realistic. The risks are enormous, and further declines are possible. Any price prediction is pure speculation. This crisis is a stress test for Pi and its community. Only time and a lot of building will tell if Pi can survive and thrive.